Hello guys, it's Max here from Daily Market Movements, and in front of me we have the Nasdaq 100 futures chart. It has been an absolute bloodbath this week, guys, in the Nasdaq 100 and pretty much in the S&P 500 as well. The Dow Jones 30 has held up rather well, considering the fact it's still at 31,000. You know, these tech stocks have just got hammered this week, absolutely hammered. You know, a lot of investors said that they it's been very risky trading for the past couple of weeks because there's been a lot of greediness in the market, especially with these high valuations. You know, you've got Tesla up at 700 billion. Apple's at God knows how much. You know, it's one of the richest countries. One of the richest companies in the world. You know, very, very, very high inflated valuations. And I think, you know, this week is where, you know, the stock market has just got a glass of freezing cold water and thrown it over investors' faces and saying, look, stocks don't just go up and up and up. They do have bad days. But that being said, bull markets do have pullbacks, guys, okay? I do not want you to forget that. You know, a lot of traders right now have lost a significant amount of money over the past couple of weeks. I have. You know, I'm going to be very honest and I'm not going to lie and say, you know, yes, I predicted this massive sharp pullback. You know, yes. You know, I knew that a pullback was easily possible, but I didn't know when, especially that it was going to happen last week. Especially, you know, it's very, very difficult to anticipate the yields rising the way they did, especially last week and this week. And I think it's caught a lot of traders by surprise. But that being said, you know, as I just mentioned, bull markets do have pullbacks. And one thing that investors really struggle to understand during pullbacks is that even the strongest, even the most successful best stocks in the world pull back along with it. So, you know, right now, you know, I see this as actual golden opportunity. You have the likes of Apple, which is 20% off its all-time high. You have the likes of Tesla, which is now 36 or 37% off its all-time high. You know, these are fantastic buying opportunities, especially going into the latter end of 2021. You know, yes, the rates are eventually going to be hiked. That's just part of the cycle, okay? And if you didn't know that, that means you were very, very silly because, you know, when the economy starts to get better, that's, you know, historically what happens. The Fed hikes the interest rate. So yes, it's a bit of a shock to the system, but it's come so quickly. But you know what? I would prefer just to get it over and done with, get it out of the way. So that means going into the middle and the latter end of 2021, we can really focus and work on this nice strong rally. You know, analysts and banks and hedge funds around the globe are anticipating for an economic boom going into the latter end of 2021. And, you know, for now, a lot of people are, you know, taking their profits on tech stocks and going back into the likes of the value stocks, you know, the opening trade. But, you know, I still see plenty of opportunities and value here in the tech stocks. You've got 5G coming out, okay? And it's not just that, it's just loads of these tech stocks are involved now. You know, when people book holidays, they book it through a tech company. Or they will use an ad, the likes of Google, the likes of Facebook, okay? When they go on the holiday, they want the latest iPhone so they can take pictures, so that they can take videos of their holiday, you know? Tech has become so evolved now that people need technology in their everyday lives. And, you know, there's no doubt that COVID has made us more digital than ever, and you know, you can only go on so many holidays a year before you have to come back and work. And of course, when they return to work, they're going to be expected to be using Zoom. They're going to need the latest laptop, the latest iPhone. So you know what, yes, tech has been hammered these past couple of weeks, but a bounce will come, okay? Historically, you know, this happens, so history will tell you that, you know, these 10% corrections are completely normal. The last one we had was back in 2018. Let me try and find it actually. Obviously that was March with a 30% decline. Going back to January 2018, here we go. That was a 10% correction in the Nasdaq. You know, we'd worked up. This was when Donald Trump won the presidential election. We had a beautiful rally, and then in January 2018, we had that massive 10% correction, all the way from that 7,000 level, all the way down to 6,220. And, you know, investors were thinking the same thing, you know, oh my God, are we going to crash completely? But no, look what happened. We did eventually have a bounce. It did take us some time to get back up to where we were trading, but, you know, it did happen. And then look what happened from there. You know, we've had a significant rally, and then again back going into the start of 2019, so phasing out of 2018, we had a huge decline, but look what happened. Tech bounced back, and that's exactly what you're going to see here. You know, back in March as well, we had that 30% decline, and tech bounces back. So see this as a fantastic buying opportunity. That being said, I wouldn't be jumping it into the market this afternoon. You know, as the old saying goes, don't try and catch a falling knife going into the weekend. I still believe that you know, this Nasdaq could take another week or so to settle. You know, historically speaking, when you see corrections like this, they normally take roughly 3 to 4 weeks, and you know, this is the third week now of the correction. So you know, there may still be another week of volatility left. It looks very likely to me now that we've broken below the 12,500 level, that we can go looking towards 12,000, and that's where the 200-day EMA is at roughly 11,800. So you know, I would not be shocked at all to see us go and test a 200-day EMA. I don't want to sell the Nasdaq 100. I don't sell US indices. It's as simple as that. I don't bet against the US economy, but I do buy the dips, that's for sure. So down at 200-day EMA, I'll be willing to put a lot of money to work. You know, I will put a significant trade down at 200-day EMA and just sit on it for months or even years, you know, because it won't be long until we bounce back up towards that 14,000 and we create that, you know, that type of V-shaped candlestick. So, you know, at the moment, whether you're trading leveraged or non-leveraged, your stocks are probably getting absolutely hammered right now, but stay in tight. Make sure you've got good risk management, because there will be a bounce, whether it's next week, which is unlikely, whether it's next month, whether it's in 2 months or 3 months' time. I am certain that the Nasdaq 100, these strong tech names and companies will bounce, and investors will come in and pick up fantastic value. Also, there was a report yesterday that there's an expected $3 trillion currently on the sidelines. So, you know, a lot of these hedge funds and banks are going to be putting that money to work, especially after these fantastic dips that have occurred. So look for that bounce. You just got to be patient and use good risk management, but it will come, and when it does come, it will be a fantastic buying opportunity. RSI also, guys, on the Nasdaq is now approaching oversold territory. So historically speaking, this is typically a time when you do see buyers step back into the market. So as of Monday next week, it will be very interesting to see how we set the tone starting the new week. But I am a short-term, medium-term, long-term buyer. I'm still on the sidelines for now. You've got to pick your times right, but you know, hopefully going into next week, I can put some money to work. If not, down at 200-day EMA, I will definitely be putting some money to work. I am bullish over.